As Victor said, weather happens, especially up here in the Northern Plains. So thank you for your flexibility in being able to join us online. This is my contact information. So just like Matt said earlier, if there are any questions or you think of something later on, you need to visit about it or want to do something privately, I'd be happy to do that. My only caution is I do have a very heavy travel schedule this winter, so please be a little patient with me. I will get back to you as soon as I possibly can, but I do have a very heavy travel schedule, and sometimes I'm checking emails and answering them in a hotel room in the evening sometimes. So just give me a little grace when it comes time to getting back to you. So we're going to focus primarily on soybeans today, but I do want to talk about the other crops very quickly. Just because what happens in the marketplace is not unique to just soybeans. We can't look at soybeans without looking at some of the other crops. I want to start with a little bit about acreage. So when I'm talking about this to groups, I always want to put things in historical perspective. So let's start with planted area. We just finished up getting the final official numbers for planted area for 2025. We're already starting to have the arguments and discussions about 2026 plantings. This is at the national level. So we look nationally, the gold line on top is corn, the green line is soybeans, the brown line in the middle is wheat. Now that's all wheat classes blended together. Spring wheat, winter wheat, durum, soft wheat, white wheat, everything all blended. And then we have some more crops towards the bottom. And I guess what I want to show here is two things. Number one, you do tend to see this kind of flip-flopping back and forth between corn and soybeans over time. And that's primarily because of the Corn Belt. So when you think about Iowa, Illinois, Indiana, Nebraska, some of that really what we call the southern Minnesota, this traditional Corn Belt region, they really only have two crops, is corn and beans. Now up here in the Northern Plains, we grow a lot of different crops. And so the decisions on what to plant and how much to plant get a little bit more complicated. So one of the things I want to point out is just because we see an increase in corn doesn't automatically mean we're going to get a decrease or the equal decrease in soybeans. So, but we do see that kind of that negative response between the two of them, or negative correlation. Now, please notice what happened in 2025. This is the most recent information we have. That was a very, very large increase in planted area, much larger than what people had expected. And as a result, we saw a much larger decrease in soybean plantings in 25 than we first realized. So that right now is kind of spilling over into not only old crop, the crop that's in the bin that's already been harvested, but also in our expectations for new crop as we move forward into 2026. Now, as a marketing person, these are the numbers I look at. So again, this is bushels produced. So the gold line on top again is corn, the green line is soybeans, the brown line is wheat, and we have everything else on the bottom. So again, let me come back to this. If you notice the soybean numbers over the last several years, total soybean production has been relatively stable, but some of that is a scaling problem. When you look at corn, which is the yellow one on top, when they say corn is king in the United States, this is really what they're talking about. It's just the sheer volume of the corn bushels produced tends to overwhelm a lot of what's happening, in particular from logistics and storage and transportation versus soybeans and wheat. So one of the reasons we're seeing very relatively low corn prices right now is simply because we had this record production in corn. Okay, and I'm going to talk a little bit about beans and what that means now as we move forward. So record corn production by far, we're blowing the top off the corn yields. And well, corn bushels. And a lot of the bushels, extra bushels, came from planted area, not necessarily from the yield perspective. So let's talk about the current supply-demand conditions. Again, I'm going to talk about corn, focus in a bit more on soybeans, but then also talk about wheat just briefly. So on the corn side, just to explain this table, this layout, the column in the red on the far right-hand side is the current numbers for old crop corn. So this would be for the corn crop that just got harvested. It's stored in the bin right now. The column in the middle in blue is from last year, and the column in green is from 2 years ago. We're going to kind of use those as reference points. So the top half of this table is in total supply. How many bushels do we have available? The bottom half talks about the usage of those bushels. Where do we get rid of them? And the very bottom row represents the ending stock. So how much do we have left over in the bin just before harvest? Now, every month, USDA updates these numbers. Now, the top half, so far the top half this year is locked in. We finally got the final official numbers. We're not going to be debating the production levels from last year. We are still trying to monitor and keep up with the consumption side because we're going to be using this crop all the way up until harvest of 2026. So we still get monthly updates, but most of the changes will be on the consumption side, not necessarily on the production side. So let's talk a little bit about planted area. Let's go back to 2023. We had about 95 million acres of corn produced in 93, about 91 in 2024, and almost 99 last year. Now the current estimate, and we'll get some more information coming out later this week, on it's, I believe it's either it's Thursday and Friday. Friday is when USDA will release the information on the crop sector. The Thursday numbers are on livestock, Friday's on crops. It's the USDA Outlook Forum. So this is kind of the first mathematical forecast, if you will, for what they think is going to happen in 2026. Now, it's all based off of historical relationships and kind of what we expect to see. So it's not an official forecast, but it does give us a decent reference point. What we expect to see from the marketers and trade analysts is about 95 million acres of corn planted in 2026. So we're really looking at a cutback in corn acres, similar to what we saw back planted in 2023. So as we think about 2026 and what might happen and the impact of planted area acres and what that might do to not only old crop corn but also new crop corn, we have to start playing this game of thinking about two crops at the same time. Now yields, we went from 177 to 179 to 186.5. Now this is a national average yield number. That is a new record, but is only slightly above the trend line yield. So think about trend line yield as kind of the average yield that's been adjusted for technology. The science of agriculture is getting better every year. And so if you don't believe me, think back to your own farms and what was your average wheat yield or average corn yield about 20 years ago versus today? It's obviously much higher today. And so when USDA puts their numbers together and they look at what is normal, they adjust for that. So when we compare this 186.5 versus what the normal or average yield adjusted for inflation, if you will, yield inflation, it's just a little bit above average. So the reason that we got this record corn production, 17 billion bushels, is mainly because of that planted area. So as we move into 2026, we look at a slight cutback nationally in corn planted area. We look at a trend line yield very close to probably a 185 is the trend line coming into 2026. We're still going to produce a lot of corn, almost 16 billion bushels in a few months. So we got to keep that in mind as we think about what's going on in the marketplace. Now I'm going to do the same thing for soybeans, and the soybean story is a little bit different. But I do want to talk about one more thing, and that's the ending stocks numbers. So I want to focus on the blue bars on the very bottom. That's the stocks to use ratio. So let me go back one slide. So what we're looking at is we're taking this ending stocks number. How much grain do you think we're going to have in the bin divided by the total use? Okay, so we're looking at an inventory just before harvest. And if you look at history, we see some variability, right? We see some high years where there's lots of inventory left and some low years where there's very little inventory left. And the reason I'm bringing this up is that it has a huge impact at market psychology about what the market is thinking about and how sensitive it is to new information. So let me go through a thought experiment very quick. If those blue bars are small, if we don't have much inventory, if the bins are almost empty coming into harvest, we tend to have high prices because we don't have a lot of supply. Everybody's kind of worried about running out. So we tend to have high prices, and we tend to have a lot of price volatility because any new piece of news has some shock value into the marketplace. Well, let's flip that around. What happens when those blue bars are really big? when we have lots of inventory coming into harvest next year, the bins are full, nobody's really worried about having any supply problems. Well, we tend to have lower prices. We also tend to see more price stability. It takes a lot of really big news to get the markets or the prices to move much. So here's my thought experiment then. Let's look at the red bar, which is the current USDA forecast. Again, this is for the crop that we just got done harvesting. And how does that compare to the last 25 years? Because this is about 25 years worth of data. And if you kind of squint and look at that and you say, well, you know, today's inventory levels are probably pretty close to average. We're not like short. It's not we're worried about our supplies. We got plenty available, but it's not like we're excessive either. Not that we have a lot of corn, don't misunderstand, but we're also using corn up very, very quickly. So we're kind of in that middle range, which based on my theory would suggest that, well, we probably have average corn prices. I know that's not what people are hoping to hear, but that's probably where we're at. So let's just double check that very quickly. And I will move into soybeans in just a minute here, but I'm going to try and lay some groundwork on the difference between what's happening in the corn market versus what's happening in the soybean market. Okay, so let's go to corn. This is a long-term chart of corn prices. So this is the futures price for corn going back about to 1990. So the little blue box, this 427 on the right-hand side, that's where the market's closed today. So that's today's closing price for the March futures contract. So let's look back. How does that compare to history? Now, this has not been adjusted for inflation. So looking back here in 1996, those prices are in $1996. Let's not worry about that so much right now. Let's just look at the pricing patterns. So let me go back one slide and let's look at two time periods when we had very, very tight supplies. So let's look at this 2012 and 13. That was actually our drought year. We had very, very high prices. Everybody remembers that. But we also had very tight inventories. And let's also look at this 2020 and 21 time frame. So that marketing year. We had really tight supplies. We would expect to see what? Very high prices. So here's our 2012 price spike. And here's our 2020 and 21's price spikes. Okay, let's go back. Let's go back one. Let's look at this inventory, this time period now between about 2015 through the early 2020. Okay, we had very high inventories, higher than what we see today. Very high inventories for multiple years. And what did we see in the prices? Yep, relatively low. Again, relative to what we'd seen before, but also more stable pricing. So when we look at today's prices versus history, we're probably somewhere in that middle part of the range, which again validates my theory or my concepts. So let's move on to soybeans and let's talk about what that means for the soybean crop. Well, if we look at the soybean numbers, again, the table is laid out very, very similarly. I'm going to talk about the consumption numbers in more detail in a moment here. So let's look at area planted. We had about 84 million acres, 83 and a half in 23, 87 in 2024, and we had a big drop to about 81 last year. Now, based on what the analysts and traders and everybody's expecting to think, you know, what do we think is going to happen in 26? Well, for national acreage, looking like and thinking that this would probably go back to an 85. So somewhere between what we saw for in 23 and 24. Okay, so we're going to see a return. So we're going to see a cutback in corn plantings. We'll probably see an increase, a return to kind of more average in 2026 for the soybean area. Well, what happened for yields? Well, we had a couple years, 2023 at 50.6 and 2024 at 50.7. Those are a little below average. So even though we planted more area, our yield per acre was a little bit lower. And then now we look at 2025, the opposite happened. We had a big cut in acreage, but our yield popped. Now again, for reference, this 53 bushels is pretty much right on the long-term average. So remember my trend line. If we adjust for the yields adjusted for technology, adjusted for current conditions, this is pretty much an average yield for soybeans. So what do we see next year? If we see an increase in planted area and we put in an average yield, this new trend line, we're going to look at probably some bigger production numbers, because if we look at the production last year in 25 versus 24 and 23, we're pretty much right in the middle of the range. So again, our total bushels produced has been relatively stable over the last couple of years. Now, what's happened to our ending stocks? What's happened to our inventory levels? Now, when we do the thought experiment here, we're going to have to throw out or ignore 2018 and 2019, these 2 years right here in the middle. That was the trade war number one with China. So, and the reason that our inventory spiked so high was because of the timing. The timing of trade war number one and the timing of the trade war we have now with China today is a little bit different. So we're in a different economic environment. So let's, for right now, just throw out those 2 years. So how does the inventory today compare to history? And if you kind of eyeball that, you'd say, well, average, maybe the high end of average, but pretty close. So here's my story. It's like, well, all right, if that's the case, our inventories are pretty close to average, maybe we're looking at probably some average long-term prices. We'll wait to see, and I'll show you the numbers in here in a few minutes. I'm going to throw a couple slides on wheat just to make sure that we're consistent. Wheat area has gone down. So we went from almost 50 million acres down to about 46 million acres to 45. The expectations will probably get about 44 in 2026. We'll wait to see what the numbers say. We'll have to wait a little bit. Now again, what happened to yields? Well, we went from 48.7, 51.2, 53.3. So even though we've been cutting back on our area, the yields have been increasing. Now that 53.3 is a little above trend line. So we did have a much better wheat yield nationally than we normally do. And what did that mean for our total bushels produced? Pretty much right in the middle, right? A little bit larger than last year, which is a little bit larger than the year before. What does that mean for inventory? Yes, we have plenty of wheat inventory, and that's one of the reasons we're seeing lower wheat prices. We're seeing more stable wheat prices is because we do have quite a bit of inventory. Now again, this is all wheat, spring wheat, winter wheat, durum, soft wheat, white wheat, everything blended together. I would say we're probably on the high end of average, not excessive. We've seen higher numbers, but at least we're getting it to the point where we got plenty of wheat around. If you look at specifically spring wheat, kind of a similar case. We've got plenty of wheat around. You add the fact that the Canadians also had a very good spring wheat crop. So the green bar is U.S. spring wheat production only, spring wheat only. The gold bar is Canadian production only. Okay, so the Canadians also had a lot of spring wheat. So let's come to the consumption part now. So part of the story, the question is, what do we do with old crop, the crop that's still in the bin, and what should we be doing or thinking about for new crop? As we get into the 2026 production, I'm starting to get some questions from farmers saying, well, when do we start pricing or planning to price some of our 2026 production? Okay, we'll try and talk about that really quick. So again, let's go back to corn. This is how we use corn up historically. And these are the big categories that USDA tracks. And again, I've given you about 25 years of information to try and give you some perspective. So the blue line on top is called feed and residuals. So think of it as the feed pile. This is whole corn that's been run through a combine that can be used for feed. It doesn't include DDGs. It doesn't include corn silage. It's just whole corn. And if you notice, the dotted lines right here, the dotted part of the line is the current USDA forecast. So remember my red bar that I showed you? That assumes that these dotted lines are correct. So if we're going to get that red bar even lower, we need to have a bigger increase in any or all of these usage or consumption levels. So let's just kind of go through and think about this. Is it possible that USDA has undershot, that we might see bigger numbers than what we're currently thinking? Well, when we look at the blue bar on top, I mean, our corn consumption, particularly going into the feed pile, is relatively high. In fact, you have to go way back here into the early 2000s before we had the big ethanol explosion to get the kind of feed consumption numbers we see today. Now, is it possible to get more? That's going to be pretty hard. And when I do my math on this and say, well, is that a reasonable number? I think USDA might be a little bit aggressive on that. We'll wait to see. The red line is ethanol. So again, this is whole corn going into an ethanol plant. We're seeing a slight uptick from last year. There is some potential if we get some year-round E15 sales that might come up a little bit more, but it's not going to be, in my opinion, a big game changer. It's not going to be like a big shock to the system where we see this big upward tick in the amount of corn going into ethanol. Now, the black line is exports. I'm going to break down this exports number in a few minutes, kind of pull that apart into the different countries that buy corn. But for right now, we're just worrying about how much corn are we exporting. Okay, and again, you can see the the black line. Those dots are pretty steep. We're seeing a pretty large increase from last year. Last year was a record year, so we're looking at some very aggressive aggressive corn export sales. And that's one of the things we're paying attention to in the corn market that, so far that looks like that number is pretty spot on. Now the green line is kind of everything else, and that whether prices are high or prices are low, whether we have a good crop or a poor crop, this other category tends to be pretty stable. So let's shift to soybeans. Okay, we already know that our total production is pretty similar to what we had last year. What about the consumption side? When we look at crushing demand, the amount of soybeans going into a crushing plant, that is going up. Some of that is driven by renewable fuels. A lot of it's just driven by, we're seeing an expansion in the industry. The existing plants that are crushing soybeans are getting larger. They're adding on some capacity for existing plants. We're getting some new plants coming online. And so again, when we do the math backwards, USDA can count. They are including all of the current crushing facilities. They also do, on a monthly basis, a large survey of soybean crushers, oilseed crushers in general. And so they're able to track this on a monthly basis pretty closely. The exports number is obviously where we've been having some trouble and some angst and anxiety. And USDA is forecasting a decrease from last year. Based on what we're seeing today, that's probably pretty close, at least so far, based on what we're seeing today, based on current export sales. Now, the challenge we have is the last time we had a trade war with China back here in 18 and 19, those were our export numbers. And actually, technically, this number is below the number we saw before. So we really need to go back into the early 20-teens to see these low export levels that we're seeing today. And to be very blunt, that has been the biggest challenge. I know most of you are very aware of that. The challenge for the soybean market has been the exports, and in particular China. And again, in a few minutes, I'm going to take that red line and pull it apart by the different countries, and we'll start to have a talk about, well, is there potential for some additional sales maybe later in the season? So we'll talk about that in a second. For wheat, the blue line is domestic milling. It goes from wheat into a wheat mill. The wheat mill makes flour. That goes into bread products of all different types. Relatively stable over time. When we look at the red bar, again, exports, that's the one that tends to bounce around a lot. The last couple of years, we've had some export challenges in the wheat market. We saw a little bit of recovery last year. It looks like we're having a little bit better sales season this year. I think the USDA numbers are fairly close to what we're seeing today in the actual realized sales. So I don't have a big argument with their current forecast. I'm going to skip over this for just a minute. So now let's get into who buys the grain. And now we're going to have to talk about a little bit of politics here. And I'm going to try and be as politically neutral as I possibly can. But we do have to talk about trade and trade policy. So let me explain this table very quickly before we go on. The 4 columns on the left-hand side are 12-month totals. So they're the full marketing year. Okay, the 2 columns on the right-hand side are a little bit different. And on the right-hand side, we're saying the far right-hand column is how much corn have we sold not necessarily delivered, but sold under contract to different countries for 2025. So this would be the export sales for 2025 corn, the stuff that's in the bin right now. The column right next to it is the sales for the same time period last year, and the column right next to that is last year's total sales. Okay, so let's look at some trends. I just want to point this out. Our number one corn buyer is Mexico. And with the exception of 2022, which we had, if you remember right, I pointed out 2022 we had much higher corn prices. And with higher corn prices, we tend to have lower export sales. So this is one of our high-priced years. And that's one of the reasons everybody, all the countries are down. So if you notice the bottom numbers, which is the annual total, that was the lowest we've seen in history. Or not in history, but in recent history. The 69 million metric ton, that number right here, that is a record. So that is the highest we've seen before. So Mexico, number one buyer, nice, good, steady buyer. They're well ahead of last year's pace. Now, part of that is because of New World screwworm, and that's that insect, the fly that lays its eggs and larvae, and it's in Mexico. There's a lot of cattle that are born in Mexico. They're bought and brought into the United States to be fed and slaughtered here in the U.S. Well, because of the New World screwworm, a lot of those cattle are staying in Mexico. And one of the reasons we've seen this increase is because they have more cattle on feed, and so they're buying U.S. corn to try and feed those animals. However, when you look at Japan, again, a very good, steady customer, we're well ahead of last year's pace. I mean, that's like significantly above last year's pace. Colombia, very similar to last year. Korea, almost double from last year. That's incredible. And even Spain, almost double from last year. So if we drop down, and then this ROW, I do want to comment on ROW. That's rest of world. So that's all the other countries that I don't have on this list. Again, they're up pretty significantly. So if we look at the total sales, we're up about 30% from last year, and last year's a record. Whew, that's fantastic. Now, my question is, can we keep up that rapid export pace? Because right now, Brazil is starting to combine their corn. They're starting to harvest their first crop corn. They're about 15 to 20% harvested for first crop corn. You know, so there's some of that Brazilian corn is starting to hit the marketplace. We're starting to get a little competition from them. I do want to make a comment about China. And if you notice, our corn sales into China have been dropping very steadily, and so far this year are zero. Now realize last year, even though we had a record export season, we sold almost no corn to China. So this 32.7 on my graphic, that's about half a vessel. So that would be about half a Panamax vessel. So that's not much corn. Versus this today, it's almost zero. So here's my point. We are having record corn export sales. We're not selling any corn to China. Now, if there were some sales to China, that would obviously be a shock. That would definitely put a spike in the marketplace. But I'm really not anticipating a lot of corn export sales into China, at least not for a while, not unless they have some kind of production problem going into 2026. Okay, so let's get to soybeans. What does this mean for soybean? Now, not a surprise to anybody, China is our number one customer. Those numbers have been pretty large and pretty stable. The last couple of years, we have seen that drop off a bit. And when you compare sales so far this year versus the same time period last year, they are down pretty significantly. Let's just really quick check, what about the other countries? Mexico is our second largest soybean buyer. Okay, and pretty good, steady customer. This year, they're a little bit above last year's pace. Egypt, number 3 customer last year. They're well above last year's pace. Indonesia is up a little bit higher. Japan is about the same. Spain is down just a little bit. Germany is down a little bit. ROW, rest of the world, is up a little bit. So really, the only country that we're having problems selling soybeans into has been China. And as you know, a lot of that's for political reasons. So let's talk a little bit about politics. Let's talk about some of the trade agreements and where we are right now. So I want to make sure that everybody understands the discussions going on between the United States and China and some of the numbers that get thrown around here. So if you remember back in November, President Trump and President Xi got together and they declared a truce or a halt to the trade war between the U.S. and China. Up until that point, it was like really escalating. And then all of a sudden they got together and said, okay, this doesn't make any sense. Let's sit down and try and come up with some kind of compromise to at least put a stop to the escalation. They were able to do that, and President Trump announced that we have a framework agreement with China. Now, to be honest with you, I'm not really sure what a framework agreement means or what the definition for that is, but at least they came to an agreement. Now, the only information we got about the structure of that agreement was from a White House press release. So right after the President Trump and President Xi got together, there was a release from the White House that gave kind of a general outline, kind of the bullet points of their agreement. Now, unfortunately, we haven't ever really gotten confirmation from the Chinese that that's exactly what was agreed to. But it seems as though they're following that framework, or at least following the information that was released from that press release. So if you guys remember, in the press release it said, well, China has agreed to buy 12 million metric ton by the end of the year, and then in 2026, 2027, and 28, they're gonna purchase 25 million metric ton in each of those sequential years. So let's put this in context. In my table, in this table that I showed you, this would be 10.1 million metric ton. So if you take that, instead of a comma, if you put a period there, this is 10.1 million metric ton. This would be 20.6 million metric ton, 22.5 million metric ton. You get my point. Now, these are export sales to China from the 1st of September through February 5th. That's the most recent data that we have. And you say, well, wait a minute, I heard on the radio that China has purchased their 12 million metric ton. Well, I think they have. Now, the reason my number shows 10 is because these are sales that can be directly associated with China. We know that there was a Chinese company that came and bought U.S. soybeans. So if I'm a U.S. company, I know that I sold them to a Chinese company, that they will be delivered to China. Now, one of the things you got to understand about global trade is there are some companies, as well as countries, but companies that will use a broker. So they'll call a broker and say, hey, look, help me get a deal and buy some soybeans. I prefer U.S. soybeans, but I want you to negotiate the price and all the terms for delivery on my behalf. So here's what I need. This is when I need it delivered. You negotiate the best deal you can. Okay, so they hire the broker. The broker then goes to a company, like a U.S. company, and says, okay, I want to buy X thousand tons or metric tons of U.S. soybeans. So I'm a U.S. company. I sell it to this broker. Well, I know it's a broker. They say they're a broker. I know these people. I don't know who the broker's working for. They don't have to disclose that. Okay, so when I, as the company in the U.S., report these sales to USDA, and I have to do that within 24 hours. If I make a sale, it's a large sale, I have to report to USDA within 24 hours that I made the sale. And actually that law goes all the way back into the Russian wheat deal back in the 1970s. So this has been around for a long time. But if I sell it to a broker, I don't know which country it's going to be delivered to. So some of this ROW, some of this 12.4 million metric ton down here, some of that we know got sold to China. And it should probably be moved up into the China category, but we don't know how much. So when the press is reporting, yeah, they met the 12 million metric ton, what they've done is they've talked to some of these brokers and said, based on your math, have they reached that target? And so it's a private disclosure. So it's not something that they're going to give a list for everybody to see in the world. So the expectation, the trade talk right now is that, yep, China has bought at least 12 million metric ton. So, okay, we're safe. How much more will they buy? That's the great question. And as most of you know, President Trump on Truth Social made a post, said, hey, that was about a week or so ago. Hey, I just got off the phone with President Xi. We had a really good conversation about our trade and kind of trade negotiations. And I really pressed them to start buying some more U.S. soybeans. And his new target was, instead of 12, was 20 million metric ton. Of course, the soybean market got really excited about that. It's like, oh, wait a minute, we're probably going to get some more soybean sales into China. Well, my concern is, will we really get that additional 8 million metric ton? And here's the reason I'm concerned, is because our export sales, not only to China, but to the whole world, is very cyclical. It's very seasonal. Okay, so what this graph shows, what this table shows, or figure shows, excuse me, is how much soybeans do we sell every week. When we look at reported sales, not deliveries, but reported sales. And you notice that we have this really big seasonal pattern. So we get a lot of people coming to the U.S. and buying under contract for sometime delivery later. They buy under contract. They start buying really heavily starting at about the beginning, late September, first part of October. That's kind of when we start hitting our big harvest season. So prices tend to be a little lower at harvest. We've got a lot of soybeans to sell. People come in and start buying. Okay, and we see this big spike in buying activity, and it stays really pretty good from October, November into about December. And by the time we get over into the first part of the year, into January, this is starting to drop off, continues to drop off into February, and then by the time we get into March, it's kind of low. Now, the red line is where we are today. That's the most recent information we have. So my problem was we kind of missed this really big peak sales season. So we're now looking at, and one of the reasons we see January and February drop off so hard is because of harvest in Brazil. And the Brazilian soybean crop is between 20 and 25% harvested right now. They're really getting into the gut, or the core harvest season. Those soybeans that are being harvested are now hitting the export market. We got a lot of stiff competition going on in the world of soybeans. So my concern is, well, even though President Trump said, yeah, he really encouraged President Xi to come in and buy more U.S. soybeans, the question I have is, well, will that actually happen? And we don't know. We do know that there was, after that discussion and after President Trump's Truth Social post, China did come in and buy a few more cargoes, a few more vessels of U.S. soybeans. But it wasn't a huge purchase. It was enough to get the market excited. People said, whoa, well, it looks like we might get something. But I'm still a little cautious and concerned about, well, why would China want to buy more soybeans? The only reason I can come up with that would be for pure politics. It would be to say, well, we're going to try and buy some more soybeans to make sure that as we move forward with our trade negotiations, that we're showing some good faith effort to live up to our end of the bargain, to try and kind of grease the skids or make negotiations in these other big issues more smooth. And when we get into April, the announcement right now is that President Trump and President Xi will sit down for some trade talks in April. Obviously, the market's going to be watching that very closely. We'll have to see what happens. So timing is actually very important in the soybean export market. And one of my concerns is we're already starting to get towards the end of our export window. And the question is, will we be able to get the export sales that a lot of people are hoping for? I'm going to skip over these for the sake of time. When we look at wheat, Mexico is our number one customer. The Philippines is number two. Korea. If you drop to the bottom line, our export sales for all wheat are ahead of last year's pace, kind of what the USDA is forecasting. I do want to point out that Mexico is our number one customer, okay, just as a sidebar here. We look at spring wheat. Our spring wheat export sales are a little bit below last year's pace. Again, very consistent with what USDA's forecast is looking at. Please notice that Mexico is our number two customer for U.S. spring wheat. So here's my point. We're in the process now of starting to renegotiate, or at least review, the USMCA, the U.S.-Mexico-Canada Agreement, which is the old NAFTA. So we do a lot of agricultural trade with Mexico. Mexico's our number one corn buyer, our number one wheat buyer, our number two soybean buyer, and our number two spring wheat buyer. So trade with Mexico as well as trade with Canada with canola and some of the machinery and fertilizer. This USMCA negotiations are going to be really, really important. And so we need to watch that very, very closely moving forward. And it will have an impact not only on corn and wheat, but also on the soybean market, because the Mexican market is a growth market for our U.S. soybeans as well. So where are we at with current trade negotiations? I'm getting very close to finished here. I already talked about negotiations with China. We kind of covered that. My concern, not concern, but my hope is by 2026, as we look at the new crop, the 2026 crop, if China does fulfill what the White House said what the agreement was, in 26, 27, 28, they're going to go back to purchasing soybeans at a pace very similar to what we saw in previous years, and that would be a good thing. So again, let's hope that these negotiations go well and that in 2026, it looks like we're going to increase our planted area, we plug in trend line yields, and we're going to have a lot more soybeans available in the U.S. system. So we're going to need to have some pretty strong export sales into China to be able to keep price levels where they are today. We did have a confirmed trade agreement with India. Now, that covered a lot of industrial and energy products. It didn't talk a lot about the major commodities. There was some agricultural provisions in there focusing primarily on nuts, fruits, vegetables, wines, and spirits like alcohol. It really no mention of U.S. access to India's market for rice, beef, soybeans, sugar, or dairy. So we don't have a lot of clarity on that. We would like to sell some more soybeans into the Indian market. They do have, it's a relatively small but robust crushing sector, so I think there's some opportunity there if we can get our pricing right. But the Indians also grow a lot of soybeans, and they crush a lot of their own soybeans. So there is going to be some trade frictions here for both corn and soybeans going into India. Argentina, we do have a finalized trade agreement with Argentina. Now, we don't sell any soybeans into Argentina, but it does have some potential impacts for the beef market because we're now going to give more access to Argentine beef coming into the U.S., but it also means that we can sell more of our higher quality, like premium cuts. Instead of importing hamburger meat, we're going to export some of our prime cuts back into the Argentine market. So it does have some potential impacts for U.S. beef. The Chinese market, I mentioned that in April, President Trump and President Xi are going to meet in Beijing for some face-to-face discussions. Let's hope that those discussions go well. Canada and China have a framework agreement. This has some potential impacts for the canola market. Again, another competing oil seed, because China is the largest buyer of Canadian canola as well as canola meal. So the fact that trade tensions between China and Canada are starting to kind of dwindle or become more fluid is helping support the canola market. Now, as of this morning, there was an announcement that Canada and Mexico have signed an MOU, a Memorandum of Understanding. So it'd be similar to a framework agreement. So Canada and Mexico have negotiated a separate agreement outside of the USMCA. And what that is signaling to me is they're getting prepared and ready for any kind of adjustments to the USMCA. They want to make sure that Canada and Mexico still have some good trade relations, whether the United States is involved or not involved. And so, again, this is one of those things that I'm watching very closely politically to say, well, what are the impacts of all of this? So I do think this is some posturing, some positioning to get ready for these larger negotiations with the U.S. One more thing, and then I'll show you some prices, kind of where we are right now, some food for thought when it comes to pricing and some marketing alternatives. We are expecting an announcement from the Supreme Court like any minute. Any day now, we're going to hear from the Supreme Court. Does President Trump and the administration have the authority that they used under this IEPA, this International Emergency Economic Powers Act? Does the President Trump and his administration have the authority to put on and justify the reciprocal tariffs? So this is going to be really, really important, and it has kind of short-term implications, but also some longer-term implications. And regardless of what happens, this is going to be an important announcement. Now, I really don't think that we're going to see a lot of shock in the grain markets, but we might see some disruption in the energy markets. We also will likely see some disruption in the stock markets. So just be careful and be ready when this happens. There might be some spillover effects, both positive and negative, in the grain markets. So there's going to be a lot of implications. We're going to spend a lot of time talking about the implications of this moving forward. So let's talk about current pricing. I talked about the corn market earlier. This is where we are as of the close today. So if you got grain in the bin, corn in the bin right now, we're looking at these kind of price levels. Not exactly great. I know there's a lot of people that are frustrated with trying to get their corn moved. Hopefully we can continue to get some of those export sales and get some corn pushed through the marketplace. So right now we're kind of in a trading range. You know, we've got a boundary and kind of an upper and lower boundary to prices. What I'm thinking about is, so what are some things that might happen in the near future to get us broken out of that? What might give us a lift in the market, or worst case scenario, put some downward pressure? We are watching what's going on in Brazil when it comes to not only harvest for first crop corn, but also planting for second crop corn. So far, there's not been any major weather disruptions. And so again, the corn market's moving sideways. So it's either going to be weather or politics, in my opinion, that puts some lift into the marketplace. We'll have to watch what's going on pretty closely. Looking at soybeans, we look at these long-term soybean trends. Oh, I'm sorry. This is the corn chart. Let's look at what we're doing with the soybean market. I copied the wrong one in. I apologize. This is where the soybean market closed today. So we did see a nice big price spike back here when President Trump and President Xi had their agreement. There's some confusion about when will China meet that 12 million metric tons, so it dropped back down again. President Trump had his post on Truth Social. We've seen a recovery and a little bit more business from China. I hope, and I know in talking to elevator managers and talking to farmers from not only North Dakota, but South Dakota, Minnesota, and even some into Iowa, there's a lot of soybeans, old crop soybeans being sold right now. And I guess my recommendation, I hate to recommend or tell you what to do because it's your farm, but my suggestion is if you have some soybeans left in the bin, that you be looking to try and price those. You can sell them today and deliver them later, but at least try and get some of those things priced, because there is some potential downside risk in soybeans, especially for old crop soybeans, the crop that's in the bin right now, moving forward. And so I would be a little cautious, and just to make sure when we look at where we have been pricing-wise, this is some of the best prices we've seen in a long time. When we'll switch to new crop corn, I'm starting to get some questions about new crop corn. So this is new crop. This is November pricing today. This would be the futures price that if you're going to sign a contract with an elevator or a crush plant for harvest delivery, they're going to use these prices. A little bit higher. We're looking at at least in eastern North Dakota, above $10 for soybeans delivered at harvest of 2026. So looking at this, unless we have some major weather problems in the United States this summer, I'm a little conservative here, but I would certainly start thinking about pricing some new crop soybeans. I wouldn't get really aggressive yet, but I would be thinking about pricing some just to start the process. Now, if you're a gambler, you're willing to take some risks, maybe looking into that April time period with the President Trump, President Xi trade talks. If you're willing to take some risks and wait for that April time period, that's your choice. Again, there's some risk involved in that. Just really quick on the wheat front. Wheat prices are at relatively low levels. We're in a trading range here. It's just going to be really tough to try and get some lift in the wheat market. There's a lot of spring wheat around. There's a lot of wheat globally. The most likely opportunity we'd have is if there were some additional issues, in particular the war with Russia and Ukraine. There were some port facilities in Russia that were under a drone attack. There was some damage to some of the grain handling systems. Not a huge amount of damage, but there was some damage, and that put a little bit of spark into the wheat market. So we're going to have some help in the wheat area moving forward. So with that, I will stop sharing. I'll be happy to try and answer any questions if there are any. I know I went through that very, very quickly. Whew.